This episode is brought to you by Perfect Bistro Cat Food. Hey guys, today I'm interviewing my cat about his perfect bistro food. Percy, you seem to be a big Perfect Bistro fan. Care to comment? Totally. What do you like about it? You love the high-quality ingredients? And the delicious flavors, of course. Yeah, that makes a ton of sense. Listen to Percy, guys. Visit perfectbistro.com to try it for your cat.
Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. Views expressed by the guests do not reflect those of the host or this show. If you're a high-income professional, especially a physician, you've probably asked yourself this at some point. I've done everything right. Years of training, long hours, great income. Why does financial freedom feel so far away? The truth is, most people in medicine don't have an income problem. They have a strategy problem. They're told to either grind harder, chase the next shiny side hustle. Somewhere along the way, it starts to feel like the only way out is to walk away from the very career you spent decades building. But what if that's the wrong move? What if the path to financial freedom isn't about escaping your profession, but leveraging it? In today's episode, we sit down with Dr. Mounang Desai, an ER doctor who didn't abandon medicine. He used it as a foundation to build a real estate business over decades. This isn't a story about overnight success or chasing trends. It's about patience, specialization, building real wealth slow and deliberately. We'll talk about the biggest mistakes high-income earners make when entering real estate, why dabbling can be dangerous, and how focusing on essential, resilient assets can create long-term financial freedom even in uncertain markets. If you've ever felt stuck between staying in your career and wanting more control over your financial future, this episode will give you a completely different lens on how to think about that transition. With that said, let's get into it. Hey guys, and welcome to another episode of the Financial Freedom Podcast. I'm delighted about today's guest, Dr. Mounang Desai, a fellow Houstonian. He's trained in emergency medicine in the medical center. He is here to talk about his real estate activities. Happy to have him on the show to share that with the audience of doctors, high-income professionals. Welcome.
Appreciate you having me.
We connected through LinkedIn. Briefly introduce yourself and we'll dive into the questions.
Physician for the last 30 years, trained in Houston, have done different endeavors on the entrepreneurial side of healthcare, from acute care facilities, emergency rooms, staffing groups. Then my career evolved from being a heavy healthcare operator, provider in an emergency medicine space into what I had always done in my healthcare endeavors, which is real estate, but wanted to do more of it in the latter part of my career. Over the last 5 years, that's where I've landed in commercial real estate.
It's a segue into the conversation, but you have so many areas of interest and expertise. A lot of doctors out there who are contemplating career changes with all that's going on in healthcare. What would your advice be to someone that would be interested in doing what you're doing?
The journey to real estate wasn't one that was all of a sudden. It's actually started in healthcare. Being a part of an acute care hospital, ground up development was ultimately at the start real estate. We acquired land, did ground up construction to do emergency rooms and imaging centers. It still always started with real estate and sharpened that pencil over 15 to 20 years. What's my advice getting into real estate? It should be measured and slow. For all the other side hustles everyone has or looks to have, my net worth, my financial freedom started in healthcare. And so I wouldn't give up on healthcare too quickly. It took so much of our lives to get to that point. I would still cultivate that as much as you can. Then if you want to do something different, make sure that it's the right step.
Quick pause here. If this episode is making you rethink how your income is structured, that's intentional. Information doesn't create freedom, structure does. At the end of this episode, I'm going to show you how to diagnose whether you're building leverage or just scaling complexity. Let's get back into it. Well said. Get your ground footing before venturing out into other areas. For someone that is doing a lot of commercial real estate development, you mentioned 290 in the different centers. What are the pitfalls and risks that one should be aware about, given today's time with interest rates? You've got a very volatile geopolitical, a very divisive political landscape. What should people be aware of before venturing out into this area?
The first thing is that we don't dabble. This is what I do every day of the week. My expertise sits in this. That's first and foremost. That goes with anything, whether you're specialized in healthcare. You got to be very good at what you do. You can't be the jack of all trades. I know that's funny coming from an ER physician. As in healthcare, you have to know what you know and you have to know what you don't know. That's the best physicians. I would say that it didn't happen overnight. We started with the first shopping center developments. Then every point in the life cycle of building those retail shopping centers, we've operationalized efficiencies that can scale. This is not a company of one shopping centers per year. We have to do many projects. The reason behind that is because with doing a lot, you get economies of scale. We have over 500 investors. That's where they get their gains because we're constructing prospecting sites more efficiently. We build retail shopping centers. As long as there's robust housing growth or the houses already exist, the tenants, the businesses that are in our shopping centers are not discretionary spend. They're staple goods that people require every day. Physician offices, exercise concepts, coffee, sandwich shops, Montessori schools. All of us use those. Particularly if you're in the Texas market, you'll see lots of retail shopping centers. At the end of the day, what we're really trying to do is avoid shopping that's close to your home.
Growing a successful business has never been easy. But whether you're navigating a complex industry or trying to reinvent one, our breadth of banking experts are here to collaborate on market-proven solutions. At KeyBank, we're built to grow with your changing needs because we're not just here for the business you are now, we're here for the business you'll become. Reimagine business as usual. KeyBank opens doors. Learn more at key.com/B2B.
Does it ever feel like you're a marketing professional just speaking into the void? But with LinkedIn ads, you can know you're reaching the right decision makers, a network of 130 million of them, in fact. You can even target buyers by job title, industry, company, seniority, skills, and did I say job title? See how you can avoid the void and reach the right buyers with LinkedIn ads. Spend $250 on your first campaign and get a free $250 credit for the next one. Get started at linkedin.com/campaign. Terms and conditions apply.
Trading at Schwab is now powered by Ameritrade, bringing you an expanding library of education with even more ways to sharpen your trading skills. Access new online courses, insightful webcasts, articles, engaging videos, and more, all curated just for traders. Plus, guided learning paths with content designed to fit your unique interests. No sifting to find exactly what you need so you can spend your time learning to trade brilliantly. Learn more at schwab.com/trading.
Where does commercial real estate lie given interest rates? After COVID, commercial places took a hit in big cities, San Francisco, Seattle, New York City. Is commercial real estate still a safe place to park your money? I've heard of data centers, industrial, mobile home parks, nursing homes. What are your thoughts?
It's important to tease away commercial real estate's your kitchen sink of everything that's not residential. You have industrial, office, multifamily, and retail. Retail is anywhere you go shop at. Retail unto itself is also a kitchen sink. You have groceries, your big malls that we historically think of with the big stores like Macy's. Right where the master plan community is coming out or within your master plan community, you'll have small neighborhood essential shopping centers within 2 or 3 minutes of your home. That is what we build. I would say that they're online proof because they're not selling goods, they're selling services. Regardless of macro, one of the asset classes that survived COVID was retail shopping centers. It wasn't by chance or happenstance that we started building these. We understood it. My partner built hotels, climate control storage. I built healthcare facilities. He's built retail shopping centers. What we noticed through 20 and 2021 is the most resilient of asset classes, retail, particularly close to home. As it relates to interest rate, it's a great question. We're building at cost. We're not acquiring, we're not value add. So we're not buying at a premium. It's an arbitrage between your debt, what you acquired. We're building at cost. So there's a large spread when you're creating something from nothing. That's where we stick with. Interesting enough, it's counterintuitive, but when interest rates are relatively high, you should develop, because duration, exposure to interest rate during development is 18 months. It's not 20-year terms. There's a lot of buyers for these retail shopping centers because they're looking for clean mailbox money. They're triple net assets. The OpEx is passed on to the tenant. It's a lot different than residential. I would say this has been a very stable asset class.
Coming onto the podcast with Malabar Capital, your co-founder, how are you different and how do you operate? What are you looking to promote to the audience?
There's a lot of real estate opportunities out there. They offer different things. We'll buy something, fill up the vacancies, improve the leases, rehab from a capital expense, CapEx standpoint, new roof, new parking lot. All of a sudden, you've improved on the value of this entire asset. Those tend to be cash flowing, you get depreciation, tax. How do we sit different? Our life cycle for our asset is 3 to 4 years. We buy great dirt in master plan communities. If you're in Houston, I urge you to take a look at our website. We probably have a shopping center close to you. We build a brand new shopping center. Once we fill it up with tenants, we sell it into the capital markets. How is that different? We're not cash flowing day one, but we have been able to consistently deliver 1.9 to 2.1x on our shopping centers. That's without pushing up rents. 4 years ago, there were no rents, there were no businesses. It's a different model, but I would say in everyone's portfolio, if they're investing in real estate, absolutely do the value add, do the opportunistic syndications, but you should have some exposure to development. And if you're in Houston or Texas, what better place? We're going to experience 10 to 12% population growth over the next decade and a half.
Talk about your investor base, doctors, lawyers, high income. Do they need to be accredited, minimums, holding periods?
All of the above, certainly physicians, because that was a large part of my network. High net worth individuals, professionals, lawyers, engineers, business owners, not just in Texas, throughout the country. Our network is big. We have over 500 investors. We've deployed over 80 million in equity capital on those projects, have returned a fair amount of equity to our investors. We have shopping centers currently for sale, full life cycle assets. We have a full different diverse investor base. Accredited investors, our minimums are 50,000. We encourage people to invest across multiple assets so they can diversify. We aim to have every one of our projects perform at above. You get an opportunity to diversify in geography in Houston, but we also are building in Austin, MSA along the I-35 corridor. Lots of projects. People have an opportunity to pick and choose. Our life cycles are 3 to 4 years.
What are some of the success of the previous projects that you've had?
Malabar Hill was born in 2021. We're not new to real estate. We're doing them in different capacities. We do shopping centers, land development. We have 9 shopping centers out of the ground in different phases of development. I would say we're in a difficult time. Interest rates rose precipitously. We've been able to navigate that, stay under budget on our projects. From a success standpoint, we've been able to build, been able to acquire good sites in Houston and Austin. Some of the largest developers in Texas building master plan communities. We've been humbled that we've been given the opportunity to develop in their communities.
How can people connect with and learn more?
I'm easily accessible. You can text, email me.
Excellent. Thanks so much for coming on. Thanks again.
I thank you for having me.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, If your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.